Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Wednesday, December 11th, and another Fed day behind us. Pretty easy Fed meeting, I thought. These meetings that are now all accompanied with a press conference, which makes the day a little bit painful because these press conferences go on for about an hour, and you know it's tough because I do pay attention to these because we've heard this before where they get to the question and the Q&A session and somebody asks a question and it kind of trips up or ends up just giving a mixed message out there to what the whole dialogue of the Fed meeting was. So I think kind of a backhanded compliment, but I think Powell's gotten much better at handling these press conferences. We really haven't had any landmines. I think for a while he had a batting average of the market would sell off. I think for a while it was like 6 out of 10 times or something like that the market would sell off when he was giving one of these press conferences, and I think he's improving that average. I think the market is kind of handling it a little bit better. I think that also comes with the territory of when there's a new Fed governor. But bottom line, I think pretty dovish, right? I mean, they're not cutting. They didn't change interest rates, but they're basically saying that they're going to be there if they need to be. And here is one headline that I took away. Fed reiterates plan to buy Treasury bills into second quarter of 2020. So that's again a big takeaway. I know they're not calling it quantitative easing, but they're injecting liquidity into the market, right? And they're increasing the size of the Fed balance sheet. That I think is notable, right? And it kind of can help you position wise, right? It doesn't mean that just because they're increasing, in my opinion, right? And this video is for information purposes only, not giving out any advice or recommendations. But in my opinion, it doesn't mean that the market is just going to blast off, but it means that there's basically wind in the equity market sales, right? When you're injecting liquidity into the market, right? Very different than what they were doing last year, and especially last year, they were tightening. They were taking money out of the system, right? And that ended up blowing up the everything, right? And one thing that I think is concerning out of the Fed meeting is what's been going on with the repo rate. It seems like there is some stress in the system, but he made mention to it many times that they're on top of it, and that's their focus now into the end of the year. So I don't know what's causing that. I think there's a couple theories out there. There's some banks that are refusing to kind of step in and provide that liquidity, so the Fed is doing it. Also, one of the market participants who usually does that, I think, is not there anymore. These are all things that I've been hearing. So there's a couple there, and the other thing is, it's possibly a knee jerk reaction to them over tightening as well. They reduced the balance sheet too much. So anyway, that seems to be a cause for concern, but they seem to be on top of it, right? Rather than someone who's at Fed president and who's basically saying things are going to, manage themselves. They seem to be like that's one of their top concerns. So anyway, I think that's pretty good overall for the markets. It's nice to get through the day and not have any of those landmines. So we're on to the next thing, which I've been joking around and calling it TT. I've been calling it the tariff thingy. Yeah, this is this is getting closer and closer to Sunday. So I personally don't really understand why that they're waiting to the last minute to decide what they're going to do with tariffs, either postpone them. So anyway, I'm not going to talk too much about that because I'll let the financial press debate that. But clearly that's another overhang for the market for a couple more days. So what happened today in terms of price action, right? And that's my theme of the day. Powell threads the needle. I think he's been doing a great job. The market is very close to breaking higher. If we look at the short term, we were only up 26 basis points for the day, so we are back above value. But this week has basically been I don't want to say the same thing, but we're just kind of moving sideways. I was going to say a chop fest, but it is what it is. When you look at this, right, with the S&P, it doesn't look like we've gone anywhere. But there are some sectors that are really taking the ball and running with them. So I want to go over those in today's video. So I think definitely the semiconductors, right? The semiconductors we're up 2% today with the market just up 25 basis points. So really, I mean, that's an impressive candle, from low to high today in the SMH ETF. Or I like to look at the SOX ETF because it's not market cap weighted. Excuse me, it's equally weighted. So it's a little bit different where Intel doesn't have such a large weight in the ETF. Sorry, let me just grab some water. I've been struggling with a cold all week this week. All right, so besides that, let me get back to sectors in a minute. I wanted to go over a little bit of macro stuff because days on when we do have a Fed meeting, it is interesting to see what is moving, not just in equities. So one of the things that I noticed right away was the dollar. The dollar did end weaker on the day, right? When they talk about more quantitative easing, even though they're not using that term, uh, the dollar goes down, right? When they're more dovish and more open to cutting interest rates rather than tightening, the dollar goes a little bit weaker. So that's a big catalyst, even though it's only 37 basis points. What happens when this occurs? Gold goes up, which gold was up 75 basis points. Silver was up a little bit more. I think these things are still in the middle of the range. Bonds had a big day today, but they did not close on the highs. They're also still in range. So they could oscillate back and forth here. But really, these two levels, it is in value. What does in value mean? It basically just means that we're range bound, right? Until we start to break these levels, right? Whereas S&P and stocks, even though we're moving, the overall S&P is moving slower, we're outside of value, right? We spent all of October, November outside of value. We're also right now currently outside of value as well for the S&P. All right, so back to my spreadsheet just here for a second. Oops, that's the wrong one. All right, so other sectors that performed pretty well, the gold miners, absolutely. Today they'll move with gold. GDX is back above value, so kind of gave this little shakeout. It looked like it was going to go. Um, I tried playing a couple of these and had GDXJ on our uh, weekend note, not this weekend, but last weekend. We saw some PAAS calls today. So, you can traffic in these things. WPM was the one that I'm playing, but it looks like it's underperforming a little bit. Looks like this PAS is just a lot stronger, right? And it kind of just goes into, I know gold is kind of its own animal, but really, what I'm continuing to see strengthen is in commodities, and the metals and mining in particular. So this is XME. I've talked about XME now a few times if you've been watching my videos. I've looking at a $30 price target. I'm long XME in what's called our tactical portfolio that I've set up a few months back. So XME moving nice. Copper is the catalyst for FCX. I wanted to see where this closed. This is really nice to see copper do this, right? So I still think, like, copper moving above the 200-day moving average. I think this can continue to move higher. There's a 294 VPOC all the way up here. Now, I'm not sure that gets there in a straight line, but I really like what copper is doing. And of course, FCX, which has been a name that I've been long in options, and I'm trying to hold off and take my last target once we get up to 1350. I talked about FCX in yesterday's video too. So, a nice day, up 4.5% in FCX. So this is really interesting. The name that I came across today, and we went over in the pre-market session here at Tribeca Trade Group, and I went long this name. I did not take a huge position because I hate taking big positions in the beginning of the day. That's really tough to do, right? I think adding swing trades much better towards the end of the day. But BHP is above the 200-day moving average. BHP, if you're not familiar with this name, they do a lot of different things. Right? If you read the description, which is what I sent out to members earlier, They are involved in mineral exploration and production, including coal, iron ore, gold. So I always think BHP and I think steel, but it's an iron ore. But they're actually, a few other things. Copper's even in here as well. So I like this mining name, and I'm looking to play this up until 56 right now. And I own this now in options and in stock through the tactical portfolio. So I think it looks pretty good. And stop will set the stop to the 200-day moving average. So that was really nice. I talked a little bit about the semis. You could look at multiple charts. The trade that I took, which was my favorite setup when we saw call activity, right? I thought the call activity was really good when it came in last week. Now you still had to sit with this trade. I put this trade on Friday, was it? Which I didn't really. That's tough to do. Remember, everything was going up, up, up on Friday, and I hate to add trades into that type of strength, but it worked out pretty well. So I took 3 targets in this trade today, and I got it all the way to the top of value, and now I'm just going to hold the balance. I'm in February calls, but you could look at basically any one. I think Taiwan Semiconductor is the best of the breed, best of the bunch, which I've talked about Taiwan Semiconductor plenty of times. I was on Bloomberg about 3 months ago talking about the breakout in Taiwan Semiconductor, and I think it's just best in breed within the group right now. But if you look across, right, Nvidia looks like it's trying to break out. I think we talked about this one in yesterday's video. If we look at Qualcomm, also looks solid. What's the one that we saw option activity in about a week and a half ago? Not Lam Research, but that looks fine too. Texas Instruments, there was some dip buying going on in that name. Looks pretty good. AMBA was the one that saw call activity today, as well as Taiwan Semiconductor. And what else? I feel like I'm leaving out a name in the group. But again, really, really nice strength there. Just a few other names that saw some option activity today. ATVI, which I've talked now about the gamers for a couple days. You've had to be really patient with this group, but it is trying. There was some short-term calls. I don't know why they picked January 3rd in ATVI, but there was kind of something for everybody today, right? Metals and mining, semiconductors, the gamers, Monster Beverage saw some calls. Yeah, January 3rd calls was the opening trade in this one. MNST. This one's tough, was a little bit tough because I think the options happened when it already kind of jumped. So I don't think you could have made money on this too much in the options, maybe in the stock from where they went in. And a couple other things. One of the things I was going over was software, which did come back at the end of the day, but just looks a little bit tired right now. I reduced some exposure in that group, even though they put in a nice hammer bar. ServiceNow is one name that I think is a pretty good setup here. Remember, ServiceNow gapped up on being added to the S&P. Well, it's given the whole gap back. So notice where it found support, bottom of value, and it saw some calls that went up. So if you go to our option activity channel, nice $300,000 trade for January 24th. Again, pretty short dated, basically just going out a little bit more than a month. All right, guys. So I'm gonna leave it. I'm gonna leave it here for today's video. But all in all, it is a very difficult week. I think to trade. So I'm trying to kind of not be overly greedy. That's why I took a lot of targets in the AMAT trade today, and I'm just kind of being very methodical. I don't want to get overexposed with this announcement. Let's just trying to be smart, right? And we don't know what's going to happen, obviously, with this tariff thingy. TT is what I've been calling it. So for now, you just kind of try to just manage your risk as best as possible. Control what you can control, right? Because we can't control what kind of announcement is going to come out in the next couple days. And I think it makes sense to have, if there is some type of knee-jerk reaction, it makes sense to have some cash available to kind of seize that moment and take advantage. Because as I mentioned in the beginning of the video, there's wind in the equities, in the sales of the equities, right? With the Fed being there in case it needs to be. All right, guys, have a great day, and see you tomorrow in the trading room.